Let's look at an example with a finance lease, the perspective of the lessee. We have payments being made at the beginning of the period. So this lease begins on June 30th and the first payment is due on June 30th. Here we have semi-annual lease payments, 4-year lease term, rate is 10%. The first thing we're asked to do is find the present value of the lease payments. Each lease payment is for $648,358. We need to multiply this by the present value factor for an annuity due. Remember, we use the annuity due when the payments are at the beginning of the period. And even though it's the 30th of the month, this is beginning of the period because it's on the lease inception date is when you make your first payment. Okay, so what do we want here? This is a 4-year lease term, but it has semi-annual payments. So the number of periods is 8, and the interest rate of 10%, divide that by 2, because these are semi-annual payments. We want n equals 8, and the interest rate equals 5. So let's come over to our tables. We want present value of an annuity due of $1. N equals 8, and I'm going over to 5%. My present value factor is 6.78637. Multiplied by each cash payment, and I get the present value of the lease equal to $4,399,997. The fair value of the equipment is $4.4 million, so we see that this must be a finance lease. It's practically 100% of the fair value of the equipment. What amount related to the lease would the company report on its balance sheet at December 31st, 2027? All right, so what we need to do is we need these journal entries here, and I'm going to start with my T accounts. First thing that happens is the entry on June 30th, 2027. The company records the right of use asset, debit to increase the asset, present value of the lease payments, $4,399,997. Record the lease payable, the liability. Post this journal entry. And then immediately the first cash payment is made. Cash payment is for $648,358. No time has passed, so there's no interest expense. This entire amount goes to reduce the lease payable. I'm going to post this entry. And then determine my ending balance on June 30th. The ending balance is $3,751,639. And we haven't changed our right of use asset, so that balance stays the 4.399 or 4.4 million. So we still haven't gotten there. Those are our entries on, or one entry for June 30th. Actually, that's our only entry. We don't need to amortize because no time has passed. We need to wait till time goes by. So December 31st, 2027, we have another cash payment, the next semi-annual cash payment, $648,358. A portion of this is interest expense, and the rest relates to paying off part of that lease liability. interest expense, I want the balance in that lease liability, lease payable, 3,751,639, multiplied by the interest rate on this lease, which is going to be 10% times 1/2 if we, or we can just say it's only 6 out of 12 months has passed, or we can say 5%. And this is going to be 187,582. The difference between our cash payment is going to be the amount by which we reduce the lease payable. And that works out to be $460,776. I'm going to post that, reduce my lease payable by $460,776 on my T account. And now I have a new lease liability. This is what's going to be reported on the balance sheet. This is $3,290,863. And 6 months has passed, so I need to, as the balance sheet date, I need to amortize my right-of-use asset and reduce the value. Credit to decrease the right-of-use asset. Okay, so this is going to be for the balance in the right-of-use asset, 4,399,997. Allocate this across the useful life of 4 years. And then I'm going to multiply that by 6 out of 12, because this would be a full year's amortization, or 12 months. And since we entered into the lease on June 30th, we're looking for 6 months, or half of that amount. And this works out to be $550,000. Okay, let's post the decrease in the assets value of $550,000. That gets us a balance in the right-of-use asset of $3,849,997. This is the balance that we're going to report on the balance sheet 12/31/27. Okay, so we are asked what would the company report in its balance sheet 12/31/27. It would report this lease payable and this lease asset, and what would report on its income statement. So for the year 2027, relates only to these journal entries here booked on December 31st. Interest expense of 187,582 and amortization expense of $550,000.